Our journey of discovery, unpacking the truths of investing, is nearly over. But I thought I'd take one final stop and visit one of the firms making evidence-based investing an everyday reality. Hi.
Hi, welcome. We've chosen to take an evidence-based approach to putting our funds together. Those funds are low-cost index funds and ETFs, which track different markets and indices around the world. We've also got a range of factor strategies, harnessing the different evidence that we have around factor investing.
As one aims to accumulate wealth, CoreShares follows a systematic approach to asset class allocation, ensuring a suitable weighting to growth assets to reach the goal of maximizing returns ahead of retirement. And then, when in retirement, the combination of asset classes changes to meet the new goal of a reliable and growing income stream. In both cases, CoreShares aims to achieve these goals with a high level of predictability.
As we approach the investment challenge, we try to stay true to the evidence-based framework. So that's around being systematic in terms of how we approach things, sticking to the maths, backing the maths, ensuring that we're working with timeframes correctly, being humble actually in terms of what we know and what we don't know.
An evidence-based approach has two legs to it. Firstly, understanding which key elements are most relevant to the problem at hand, and then ensuring that the evidence used is robust. When assessing the evidence, CoreShares ensures that it's research-based, rational and repeatable, and lastly, applicable.
We typically look for evidence which is research-based. That research should be independent, typically would be academic in nature, is cited and peer-reviewed, and often published by credible journals. In addition to that, we look for research which is rational and repeatable. That rationale should be from both an economic perspective as well as a behavioral finance rationale perspective. And the repeatability of the research and the evidence usually relates to statistical significance in the empirical findings of the research. And then importantly, it should be applicable. It should be applicable in terms of the investability of the evidence that we have found, specifically for our investors in the local market.
So what are the key pieces of evidence underpinning the CoreShares product range? There are four key areas, starting with the returns one can expect from the different asset classes through time.
Through time, investors can expect lower volatility from defensive assets like bonds and higher returns from risk assets like equities.
We've seen that by keeping costs low, this benefit compounds through time.
Multiple studies from S&P, Morningstar and academia have shown that an investment product's costs are so important that they are the largest predictor of a fund's future success.
Diversification has an important role to play when managing risk.
This relationship between diversification and risk is so important that Harry Markowitz, a Nobel Prize winning economist, declared diversification to be the only free lunch in investing.
And lastly, the additional return available from factors.
We use factor investing to give clients risk-adjusted outperformance relative to the market through time, or in specific use cases like dividend strategies.
When clients impart their money to a money manager, they are looking to us to execute our responsibility with the most amount of skill possible, with professionalism, and with a great deal of fiduciary responsibility. So the question is, how do we discharge that fiduciary responsibility? And that's not through guesswork. It's through using an evidence-based investment framework. And by doing that, we find that we're able to improve communication with the client, we're able to build better trust with the client, And importantly, we're able to build more predictable outcomes.
At the start of our journey, I asked the question, how do we give ourselves the very best chance of achieving our financial goals?
In short, it takes two things. First, setting your investment approach, preferably a low-cost, evidence-based portfolio that matches your investment objectives. And secondly, as John Bogle would say, stay the course.